Hello traders, today is April 20th. Welcome to my trading journal. What you're looking at is the Jigsaw Day Trader platform. Excuse me, these are all futures products from left to right. This is the Ultra Bond here, the 30-year, the 5-year here in the middle, the 10-year T-note second to the right, and all the way on the right is the E-mini S&P. And in a healthy market, these products all have an inverse correlation to this product. So when this product is selling off, these products go up and vice versa. I'm doing things a little bit differently from now on. Instead of just posting my actual trading video, I'm just going to do a recap at the end of the day and kind of walk through each one of my trades and give the rationale behind it. I think that's an easier way to do it. It makes it more visual and watchable. So that's the route I'm going to go from now on. Plus it helps me out a little bit more because I can kind of walk through and think about what I was thinking at the time and also what I would do differently. There's really no charts here. Sometimes I refer to charts, but this is all just trading on order flow. A couple times throughout today, I think, if I recall, I used a chart for a trade. I think the first one was kind of a chart trade and just kind of a setup. Context was great for trading today. As you can see, the 10-year here, nice, perfect profile. I come into a day like this and I say to myself, I'm going to buy the bottom and sell the top no matter what, because you have traders that are in charge. It's not other time frame participants. It's not people that are just trying to unload a position no matter what. This is people that are just working a range. So I'm gonna. It looks like I'm starting to place a trade, so I'm gonna go ahead and stop this thing. So I kind of slept in today. I didn't get here at the battle station till 9. It was about 8:30 or so a.m. Prices were working at the top of the range at the time, so you could see the travel of the 10-year. It was working up here. The 30-year was working up into the 28, 29, 30 area. And then it dropped in very, very quickly. All these products did. They dropped in, the 30-year dropped into like 14, 13, 12 area, and then you got a little bit of a bounce. So what I was looking at for this first trade here, I was actually looking at a chart at the time, and I'll bring that over. And you can see right here, this was the very quick dive down, and then we started to work our way back up, and I was looking at resistance here at 20, 21, 19 to try to sell this thing back down. So that's what I was looking at as far as this one. I kind of I was right on the edge of one of my rules, which is not to sell below the point of control. I think that's because this is an oscillating product, but I think I just decided to take it anyway. Not really 100% sure why, but it looked like a good setup at the time, because they were all starting to push back down. As you can see by the chart, it actually worked. It just took some time, and I couldn't sit through it. So I placed a short trade at 19. First, it looked like it was going to run away from me. So then I paid up for it at 17, and I think at that point, I remember getting filled and thinking like, I don't know if that was such a good idea to pay up for it. So immediately in my mind, I'm thinking, well, risk reward on this thing. If we drop back into where we we're at like 13 probably to cover as far as the target, 13, 14, and I just got filled at 17, and I'm wrong way up here at 22, 23. So I wasn't too happy about that initially. So immediately I'm looking at this thing. If I get any sort of pushback, I'm just going to take it off. Just going to cover it pretty much right away. So again, this is not outside of my comfort zone, not one of my favorite trades is this continuation trade, especially on a day like today when I knew in the back of my mind that traders were in control, so it's going to oscillate around a midpoint, which is pretty much what happened until the end of the day. All these products actually closed on their highs of the day. The Ultra Bond, the 30-year, the 5-year, they all made new highs, and they closed right on their highs, and there's a reason for that, because the ES pretty much took a dump at the end of the day, and they really had no choice. But otherwise, throughout the day, these products typically oscillate around a midpoint, so you can kind of count on that. But as the day wears on, you really want to be careful that you don't let it run away from you. So it's a good, slow environment. It's a little different than what we've had lately. These are kind of environments that I like. I like to go in with some size and just follow the side that's in control. I mean, it is 9:25 a.m., so it's 12:30 on the East Coast. Lunchtime hour. Can't really expect a lot of movement. So I'm already looking at covering this thing because I'm thinking I paid up for it. So unless it just dropped right in, I wasn't going to sit through that thing too much longer. So that was trade number one. So this is trade number two. I'm looking at, you can see we've actually fallen all the way in. If I would have stayed with that trade, I would have made a little bit more than just a tick on this. So I'm looking at the 10-year, trying to catch the bottom at 30 or 30 half. I'm also looking at 12 or 13 in the 30-year. So try to put an order in at 12. Immediately you could see the bid pumping up and the offer just pull away. So I'm not going to get filled at 12, I know that. So try to catch 13. And the Ultra Bond's running away. That's the big cue for me. Biggest clue on the 30-year is the Ultra Bond. The Ultra Bond's definitely a leader all the time, it seems like. When it starts to run away like that, you know that the 30-year is going to be a tick or two behind it. So I go ahead and pay up again. I wanted it at 12 or 13. I paid up at 14. So again, I start with that little uneasy feeling in my gut. So I could have had 13, kind of kicking myself right now. And I know that I got to risk about 4 ticks. So it's still 9:30, 9:35 a.m. It's 12:30 in New York. Keeping an eye on the Ultra Bond. They've been moving really well with the ES today. So the ES is starting to bid up a little bit. But as soon as it falls in, like 3 or 4 ticks, you could see the Ultra Bond at 30-year start to bid up. So then I immediately pay up over here in the 10-year as well, because I feel like the 10-year is more of a almost like an intraday swing trade, where I feel like I would kind of hold this, the 10-year, all the way to the top, and I can use the 30-year to kind of scalp ticks out while I got the 10-year going higher, because I know the 10-year is not going to go lower. It's not going to get outside of this range today. It's just one of those days that it's not going to happen. The only question is whether the range is a 5-tick range or if it's a, all the way to the top range. That's the only question at this point in my mind. So I got no problem running both of these trades at the same time. Might take a little bit of heat in the 30-year. But even if that got down to 10 or 11, I think it would still snap back and come back up. It's just one of those days. So I'll go ahead and fast forward through all this, and then I'll explain when I cover these trades why I covered them. I've only had 3 go up into 17 in the 30-year over here. So that like kind of aggression has stopped. So there goes the ultra bond finally. Can't go offer or can't go bid at 17. See, immediately when they try to take a bid, it just goes right back offer. It's the same thing that happened here at 16. So on each progression, you want to see it have some staying power. See, now I think I'm in decent shape. I can at least get 2 ticks out of this. So now I'm looking at maybe I should look at start. Maybe I should cover this. There's only 22 on offer. They should be able to take that out if they're going to keep going. The longer it sits here and lingers, the longer it makes me nervous. Loss of momentum in the ultra bond. Right there, I should have been. Yeah, I should have been more aggressive at trying to take that off. As soon as that offer changed and the bid pulled away at 16, I should have covered it. So I got 1 tick out of it, whatever. And we're back over here in the 30 or in the 10-year, and back at my strike price. I lost 2 ticks on that trade. No, I didn't lose the actual ticks. I just lost the progression in the trade. But I'm still not worried about it. Like I said, it's not going anywhere. I have full confidence in that. So I'm not sure what I was doing at this point, but I must have been a little distracted because I feel like I should have bought 14 again here. Maybe I was letting it fall in or hoping it would fall in a little bit more. I'll fast forward this again until we get to my second entry in the 30-year. See, right here I'm thinking about buying 12, 13, which is the right move. Should have just been trying to get it filled at 12 right there. Not sure my hesitation. So right there, I'm 16 in the queue. I feel like I'm pretty confident I'm going to get filled. If I recall, I think I chased this thing quite a bit. Now I'm definitely not going to get filled at 13, I don't think. Especially if it doesn't drop back in right away. So now I'm really chasing it. 3 ticks up from my desired entry. So now basically my risk is 5 ticks to make 4 ticks. I'm already uneasy about this. Not only that, but the resistance in the 10-year is basically at 1/1/2. So I'm right up against it already. So I'm thinking to myself that the 30-year might have 2 to 3 ticks here. If I can capture half of that, then I'm in good shape, which means I'm looking at another 1 or 2 ticks on this trade. I just leave that up there. I guess I'm going for a home run at that point, but this would have been the second time, I think, testing resistance in the 10-year and the 30-year. The 30-year for me is definitely like a momentum instrument. So as soon as the momentum slows down to a crawl, I just get that kind of eerie feeling because it'll snap right back on you. 3 ticks right in your face really fast. Yeah, to say I don't trust the 30-year is like putting it mildly. So falls back in. I'm okay being a 1-tick warrior. Just taking 1 tick out of that. I still got the 10-year, and it's coming up against the resistance I was telling you about. And this is where I'll show a chart. So this is that fall in here. This is the 10-year. This is where it fell in. All those products fell in. They bounced up here, and then it came back down, and I got filled down in this area. And we're coming up right up into 1 1/2 where we sold down previously. And you can see it fell right back down. So I try to give it some time to see if it'll get back through up into this range. But ultimately, I just have to cover it because it just lingers in this area way too long. And that's kind of what you'll see right here. So this is 1/2 1. That would be exactly where that resistance is. So I kind of let it go a little bit longer. Give it a few more minutes. So right there, we're having a really tough time taking that bid at 1 even. Then I saw that bid shrink away and then pump right back up. So I know like it's back down to 600. You can see it right there. So I'm 800, 830 something in the queue. Might not get filled, I don't know. But I already don't like it. I think it's going to push back. But we've kind of lost our momentum here for sure. There's no selling pressure. Sellers aren't attacking yet. See, the offer drops away, so I pull my offer, and then immediately it pumps back up. So there's a lot of like fuckery going on right now. But just like with all these products, the longer it lingers right here, the longer it lingers, the more nervous you get. You definitely want to keep the buying pressure, stay on that side, or selling pressure if you're short. But on 169 in the queue, there's no buying at all right now. Makes me nervous. So there you go, I get filled. 3 ticks. And it doesn't take long before this thing gets smashed back down. But I will fast forward to the next trade. So it turns out I probably could have had one more tick on that trade, watching it in hindsight. But that's all right. So now we're back down to the lows. You can see the 30 years at 10. It's right at the bottom of that profile here. 10 years right at the lows. And I'm just sort of waiting, watching. I seriously doubt it's going to push through, but 5-year already pushed through. That gave me a little bit of pause. 5 years, 3 ticks down through the low. And that's normally a leader for the 10-year, or at least an indicator. So I don't know what I'm doing right now. I don't know why I couldn't get filled. I guess there we go. A little bit, a couple seconds late trying to get filled on that one. So I'm okay in the 30-year with either 30 half or 30. Either one of those levels I'd be totally fine with. So the 30-year is going to run away from me, so I just go ahead and put a market order in. So I'm fairly, like I said, I'm fairly confident that it's not going anywhere, at least not against me. I'm 138 in the queue on the 10-year, trying to get filled. Chasing it again. And I think at that point I was like, you know what? Screw it. Like I won't. I'll just go with the 30-year trade. At this point, I think the ES had been bidding up quite a bit. It's been pushing into the highs of the day. It kind of made me nervous a little bit. There might be too much selling pressure because of that. The ES hadn't begun to tank yet. So for some reason, I take that trade off there at 1 tick again in the 30-year. Not sure why I did that, to be honest. I think I was just more, at this point, more comfortable trading the 10-year and just kind of letting it kind of do its thing for the rest of the day. So I'm already 3 ticks up from my desired entry. Cut my lot size in half, so I'm working a 2 lot. And I start placing orders. If it falls back in, I'll just kind of get filled as it falls back in. Because again, I'm not worried about this thing taking off. At least dropping in, making new lows. Today was a pretty good day. I made a lot more trades than I normally do. I think just because I came in and I saw the context and the environment, and I thought, oh, this is going to be a really good day for trading. So I made a lot more trades than I normally do. But at the same time, I wasn't ready or wasn't willing to let these things kind of play out for some reason. I think I've been so accustomed to kind of this more frenetic, volatile environment that I just didn't want to let these things snap in my face. So if I just take 1 tick out at a time, especially when we didn't have kind of an established direction yet, didn't have any sort of momentum. Like I said, the ES was bidding up most of the day. So 10 years already, so I took it off at, I think I got filled at 13, already 2 ticks up. Just like I figured, the 10-year doesn't look like it's going to fall in. So I'll go ahead and fast forward this until we get to where I cover. So I watched the Ultra Bond fall in about 5 ticks. I watched the 30-year fall in about 3 ticks. And I think this trade was just sort of wearing thin on me. And I thought to myself, well, I could let it fall back in, which it's done 2 or 3 times already, and then buy it again, and not chase it this time. So I'll just take 1 tick off. And I can buy it again if it falls back in. That's kind of my mindset at the time. And really it was the Ultra Bond at 30-year that kind of, falling in the way it did so aggressively. I was just expecting a lot of follow-through from, people piling on to that selling. Which is starting to happen. You see the Ultra Bond starting to push down, 30-year. And now I'm a little concerned I'm not going to get filled on my little 1 tick. I already kind of paid up for this. This is one of those scenarios that coming into the day, I thought to myself, I'm just going to buy the bottom. If it comes down to 30 or 29.5, I'll just buy it. And for some reason that happened, and I just didn't buy it. I was waiting. You get into these situations where you're just waiting for confirmation all the time. It's not a bad thing, but I was waiting for confirmation. And really, it was just kind of like one of these slow things where you're not going to get an absorption and backtaking down there. You don't need to, because they're just going to buy it. because it's a trader's paradise. So anyway, I got my one take on that, and then this is the point where the ES just starts to, I think it was news driven, or it had something to do with the closing of the pit close on crude oil, but it just starts to take a shit. And I'll fast forward through this to my next trade, but you can see that where the ES was trading in the 50s and 40s earlier and where it ends up going. So you can see we're well off the lows in the 30-year and the 10-year. The ES was trading in the 50s and 40s. Now it's down through the 30s into the 26. And this is just kind of a momentum thing. I know that Ultra Bond, the 30-year, bombing higher. I even think about taking a trade in the Ultra Bond, decide against it, which is smart. Ultra Bond's a beast. And then I take it in the 30-year. And then this is just one of those things where you're just trying to take a couple ticks out, take advantage of the momentum. As long as the ES continues to tank, it just looked like it was just going to keep going. The ES, that is. The way it was just falling down like a free fall. Definitely had something to do with crude oil and the way it was trading at zero or whatever it got down to today. So I got my target at 27-ish, immediately moved my stop to break even. Like I said, this is just a momentum thing. It could snap back at any time. So at any sign of pushback, I just take it off. So two quick ticks. Don't care if it goes higher. It's more about just alleviating the risk as soon as possible. So that's that one, and then we kind of get, it does push up a couple more ticks higher, and I'll show you the very last trade of the day. Okay, so we're up at basically the highs. There's this profile step here in the 30-year. That's kind of what I'm keying in on. First thing. The other thing is you'll see some size start to show up on the offer in the 30-year. Right there we get above 200, and I'm like lately that's been showing up, and normally I wouldn't pay attention to it, but over the last few days when that shows up, it's definitely been pushing the price around. So I'm keying in on that, and then they start to load up above it. And granted, we're getting close to pit close, so it's 7 minutes till noon. So everybody's trying to unload their positions, but I immediately see that and I think, well, I'll just take a shot at it. Maybe pull out a couple ticks if it bounces down, which it should. It was pretty strung out at this point. It kind of gone straight up, relatively speaking, not the way the ES can or other products can, but the way the treasuries can. It definitely was due for a bit of a retracement. So again, I don't see this pushing through the highs at this point, regardless of what happens in the ES. So I wasn't too concerned with that. But I did think this would fall back in. If we can get a bit of a bounce in the ES. And even regardless, I think it was just a little bit strung out. And this was a really key area, having a profile step like that. So it takes a couple minutes to play out. I think it goes against me a little bit, if I recall. And the size starts to fall away, if I remember, and I remember thinking like, oh shit. Like the ES continues to take a dump like that, it might really, really go against me. I might be super screwed. I think I felt like as long as the 10-year holds 40 or 04, and basically the Ultra Bond kind of stays below the highs, I felt like I'd be okay. At least try to get a scratch out of it if I had to. Definitely could have had a better entry, maybe 1 or 2 ticks, and I definitely could have waited for a little bit more confirmation on this one. So you can see the treasuries are still bidding up. They're basically what's holding up the bonds at this point. I think that gave me a little bit of pause. And then right there, the Ultra Bond bids up. Just bid up 3 ticks. And the bid pumps up on in the 10-year, and I should have just immediately taken it off right there. I don't know why I kept dicking around with it. So there you go. I get filled 2 more ticks, and that's it for the day. And after this, the ES continues to tank, and Ultra Bond goes all the way up, makes new highs, and 30-year makes new highs. All these end up closing like right on their highs or a tick off their highs. Just pretty amazing stuff. But that's it for me. Let's see. Let's count them up. 1, 2, 3, 4, 7, 8, 9, 10, 11, 12, 13 ticks. 13 ticks on the day. Not bad.